How is Biden going to change my taxes? Welcome back to our final video in our tax series about taxes in retirement. Taxes are a moving target. Every new administration means new taxes, and that means a lot of media hype and jargon. So let's go over some of the ways that President Biden has decided or wants to change our taxes. The last one, for the right people, could save hundreds or thousands of dollars. The details won't be in depth, but there'll be a link to the Kiplinger article in the description. And let us know if these are either good, bad, or neither, or both for you. So now with control of both the House and the Senate, Biden may be able to get a lot more of his proposed tax law changes to actually pass. Now, he won't get all of them through because the majorities are pretty super thin. And don't expect quick action on the tax law changes either, because there's more pressing things early on in his presidency that he needs to take care of, like the pandemic. But let's take a look at some of the higher profile tax things that Biden was talking about during his presidency. And if you're aware of these now and actually do something, key point, then you'll be better situated for if and when he actually does get some of these changes through. So first off, he wants to raise the highest tax bracket from 37% where it is right now back up to 39.6%. He also wants to cap itemized deductions for wealthier Americans, limit like-kind exchanges for real estate investors. That's going to hurt. And he wants to phase out the 20% deduction for business owners for the upper incomes. He did promise not to raise taxes on anybody making more than $400,000 though. And if you don't know how I really feel about that, you can watch a video that I did for a podcast on YouTube. And I did that before the election. It actually goes a little bit deeper into some of those changes. And the link to that video is going to be in the description. It's titled Episode 75, Joe Biden's Tax Plan with Harper Miller. So I had my daughter, and it was kind of like a back and forth. I would say, his plan is this, and she'd babble a little bit. You can't really understand what she's saying, but it was cute. He also wants to eliminate the step up in basis for inheriting capital assets. And so basically, if you inherit any asset over $1 million, you are considered rich that year. Yeah. So you made over $400,000 that year, you're considered rich. So the video I just mentioned actually goes over that. And there's another podcast where I show you what that looks like. And that video is titled Episode 79, The Rich Aren't as Rich as You Think. And the link to that's in the description as well. He also wants to raise the corporate income tax rate from 21% to 28%. And he also supports a 15% minimum tax on large corporations. He also wants to forgive student loan debt up to $50,000 and also exclude from taxation that $50,000 forgiveness as well. Mixed emotions about that. One, I think college costs way too much. And we're not getting, in a lot of cases, they're not getting the education, or the type of jobs do not give you the amount of money that you need in order for what you spent in order to get that degree. So there's that. Also, I still kind of feel like if you did incur debt, you should pay for it. I feel like, part of my story is that my parents had the decision when I was about 6 years old, whether or not they were going to claim bankruptcy, and they decided not to. And so in other words, they had to climb out of a hole because they made a decision not to basically make someone else pay for their debt. And so I feel like if you incur a debt, you need to pay it. So there's the competing thought processes and competing emotions that I've got going on right there. It's like, one, I feel like college is way overpriced for certain jobs that you get, and that you pay far too much for that degree. It's like, basically, if you look at it as an investment, the risk reward ratio just doesn't play out. So some good tax changes that he is going to do is he wants to expand the child tax credit and also expand the child and dependent care credit. All right. He also proposes creating tax incentives and credits for small businesses that offer retirement plans. This one is interesting. His healthcare plan calls for a tax penalty on pharmaceutical companies that raise their drug prices by more than the rate of inflation, and also proposes taking away their deduction for advertising. He also wants to take away any tax incentives for pharmaceutical companies moving production overseas. Another one that I kind of like is that he does want to increase the tax benefits for senior citizens and those that care for any senior citizens. And to also help protect Social Security, Biden proposes to make more income from wealthier individuals be subject to Social Security tax. For 2021, wages above $142,800 do not have to pay any Social Security tax. And so what he is proposing is keeping that limit there and creating what's known as a commonly called a donut hole. And so there will be no extra Social Security tax at all paid on wages above 142,800 until you hit 400,000. And anything above 400,000, he says you should pay Social Security tax on that income. And like I said, I've talked about that in past ones and kind of agree with that because Social Security is in trouble and there needs to be some type of a shared sacrifice. And that's going to affect far fewer people than if they just decided to raise the 142.8, because there's a lot more people and couples that are making 142.8 than are making 400. And so that, I feel like that's a decent compromise in my opinion. Biden also plans to expand affordable housing with a new tax credit for first-time home buyers of up to $15,000. And it's a refundable credit also. And not only that, he plans on enacting some type of a new renter's tax credit as well. Okay, this last one is kind of a doozy and is related to anyone selling highly appreciated assets. It's a proposal that's related to affordable housing. Biden is calling for opportunity zone reform. This is really exciting for some because it allows you to defer the capital gains that you may have gotten from selling a business or selling some type of a personal property or real estate property, so you don't have to pay taxes on them. So if you or someone you know is going to sell some highly appreciated assets, this may be an option for you. Well, that does it for our tax series. Our next series will debunk and clarify some of the information or misinformation that you might hear out there on annuities, the ugly, the bad, and the good. As always, if you want more information on retirement, our contact information and calendar link is going to be in the description. And don't forget to smash the notification bell, hit that, smash the subscribe button, then hit the notification bell in that order. That's kind of how you want to do that, right? That way you can make sure to stay updated every single week on new content to help your retirement. And we also have another YouTube channel for a podcast called the Retirement Rescue Radio, where we dive deeper into a lot of these topics in a lot more long format style. Once again, just trying to bring you enough content to educate yourself so that you can live the retirement that you deserve. So take care and we'll see you next week.